So good morning everybody and welcome to today's webinar on motor insurance section, new trends and new emerging risks in motor industry. Today's webinar will be presented by special guests Alison Goodwin, Philip Morton and Gary Peart from AON. Before I do a little introduction on our guest speakers, I'm Sarah Jarvis and I'm one of the category buyers here at YPO. Two of the contracts that I look after are the Insurance Brokerage Framework and the Insurance Placement DPS. So a little bit of background. So Alison is a UK public sector's practice leader. Alison has worked in the public sector insurance industry for 30 years, working for both local authorities and in the private sector. Alison currently leads AON's public sector practice, providing insurance and risk solutions to local and central government, education, healthcare and emergency services. Philip is the principal consultant. Philip joined AON in 2004 and his remit entails working with clients to improve their risk profile and supports them in managing operational and strategic risks. And finally, Gary, who's the Associate Director for the Automotive UK Corporation. So Gary has worked in the insurance industry since 1983 and with AON from 1996. Been with Global Corporate Broking since 2001, specialising in motor fleet risk, ranging from SMEs to multinational non-conventional programmes. So before I pass over to Alison, I'd just like to go over a few items so you know how to participate in today's event. You've all joined this webinar in listening mode only, but we really want you to engage throughout the webinar, asking questions at the bottom with the Q&A box. And we will try to answer as many questions as we can during this webinar. We're trying to leave a little bit of time at the end to answer any more questions, and any unanswered will be followed up after the webinar. So now I'm going to pass over to Alison.
Morning, thank you very much, Sarah. So we're going to do things a little bit differently today. What we're not going to do is talk through a whole series of PowerPoint slides. We're going to do this in a more interactive way, and I'm going to be your host for the session, and I'm going to effectively be interviewing Gary and Phil. So the topic today is current and emerging trends in relation to motor specifically, and Sarah has done a brief introduction, and I'll let Gary and Phil talk a little bit more about their roles and specifically what that means in relation to motor risk. So Gary, you're on the broking side, so what does that entail day to day?
Day to day is basically understanding client, customer risks, insurance, etc., and broking within the wider insurance world, essentially to obtain best terms, conditions, etc., for their fleet of vehicles. And obviously, there's varied people on the call here, and would range from council type fleets to, shall we say, big internet providers, etc. And the like.
Lovely, thank you, Gary. And Phil?
So in a nutshell, what I do is with my colleagues and some very carefully selected third-party suppliers that AON have approved, we come alongside organisations to look at what they're doing, understand what they're doing. We can benchmark as well, but to really drive the risk profile into a place where we know the insurance market are a little bit more receptive. It opens up different channels of insurance. It ultimately improves the risk, which should reduce costs as well. So we're strictly speaking, we're a consulting service working very closely with Gary and the wider motor desk within AON. We give a full wraparound service for any type of fleet. By way of example, just a couple of days ago, I was chatting to a supplier who have been making real headways in helping blue light organisations really try to change the way that those fleets are gathering data and managing risk and making themselves probably not more insurable, because a lot have got very high deductibles and non-conventional insurance policies, but certainly around mitigation and minimisation of costs and reduction of costs by bringing in some pretty clever tech. And that's what we do. That's what our role is within this, to support Gary and guys like you, Alison, in managing the clients.
Lovely, thank you. So we're all adapting to different ways of working and different ways of delivering service, and there's a lot of chatter about the hardening market. Gary, what are you seeing specifically in relation to the motor market, and how is the motor market currently changing?
Well, you can probably split it into two types, and hardening is probably a bit too harsh. It's more of a realignment, shall we say, to actually rating and pricing, because traditionally motor has been a loss leader against most other insurance risks, and insurers have sort of brought that in to subsidise other types. But now they've all got to stand on their own 2 feet and obviously pricing accordingly, which is possibly where you will be seeing significant or gradual increases within your premiums that you're paying, coupled with significantly rising insurance, reinsurance costs. What might look like a very, very good risk for insurers, it is hardening slightly, so they are being a little bit more selective into what type of risk they will write. I think we've got a diverse type of fleet representatives here. So from bin wagons to blue light, they are getting, they're getting hit with very large increases, couriers, haulage vehicles, etc. But where there's low use vehicles, we're still getting very good deals from insurers above the sort of SME level. So anything that's probably paying under 75, 50,000, it's pretty much a hardening type market, but the deals are still there. Anything that's 6 figures and above, and certainly on a self-insured retention basis also.
So I guess risk management is playing a bigger part than ever with rates changing, and insurers looking for more information. Yeah,
massively. And we'll touch on, I think Phil will probably touch on the motor desk and motor fleet proposition that we're working towards at the moment, which is just about launching. And it's just getting the information out there, what we need to actually broker a risk effectively to an insurer, because they are looking to see what the customer's actually doing to help themselves, as opposed to just driving the price down, which doesn't work, and we know that. And Phil will elaborate further what we are looking and attempting to do.
Yeah, clear the decks, everybody. 3 hours coming up.
Exactly.
What do we
grab
do?
a coffee. Yeah.
Grab a coffee. Well, we've got a great question already posed, and it's probably more relevant when we get onto electric vehicles and scooters and bikes. But what are we doing? I've got a few slides I can share, but I think we can save a little bit of time and wait for them to come. What do we need to do? We need to step forward. We need to advance. We need to be adapting to what technology is out there. We need a fleet risk really to be able to capture far more information about incidents, bumps and accidents than your driver usually can. The driver's had a stressful situation. None of us cope very well unless it's our day job, and even then people who have got a day job which involves stressful situations still find it's an art and a skill set that's got to be developed over experience and time. And we're asking drivers to collate information that might be useful 3 or 4 or 5 years later. And it's not the first thing that they're thinking about. They're wondering whether they're going to be able to do the delivery that they were on or get to the job they were going to. And we're talking about collating good evidence that'll stack up in a bit of litigation. So for us, the fleets that are rising to the top of the pile of those with good driver risk management, good vehicle risk management, and data collation, photographs, CCTV, dash cams, telemetry. You cannot understate how important those things are in managing risk and cutting cost. And anything you can do to cut the cost out will help an insurer be more favourable when it comes to pricing. So those fleets that have purchased more recent vehicles with more connectivity, a fleet of Teslas. I know we're partially answering a good question here. A fleet of Teslas will capture pretty much everything on the road without you having to bolt any extra cameras in. Not every commercial vehicle will come laden with technology, because organizations buy on price, and low cost is a mantra that is followed by every business, because cutting cost is essential. But when it comes to vehicles on the road and putting your people in them and then insuring them, there's a balance to be found about overloading it, having some and having none. And we're there to help every different kind of fleet understand what's possible and what's achievable, because ultimately the insurance market know what kind of risk your organisation is, and whether we like it or not, that's insurance. We're all bundled together into a clever algorithm, and you pay the going rate. How much you can save then depends on how much you're investing in the drivers, the vehicles, the journeys, and that's where we can really help leverage a market position through Gary and the team.
Also, and Gary, do correct me if I'm wrong, generally insurers like to see impact, don't they? So it's not just enough to fit trackers in all of your vehicles, for instance. You can't do that and expect a discount on your insurance premiums tomorrow. It's about actually seeing a change in the risk, isn't it? So it's a much more sort of medium-term approach.
It is.
With some of the technologies.
Obviously, insurers will recognise the kit that's in there and understand that that is there to help drive the claims, etc., the history. But until it impacts on that loss ratio and the insurer starts seeing a reduction in both frequency and severity, you will not see an actual impact on the price that you actually pay. That said, it is all, even if you just put that kit in, it's what comes out and where and who analyzes that data and subsequent management of the driver. If somebody's having 2 or 3, 4, 5 vehicle incidents, well, apart from the fact that they really shouldn't be driving a vehicle, you can then focus and find what sort of suitable driver training or remedial use as well for them. And so it's what you get out of the information that's coming out of it and how it's used, as opposed to just sat there on somebody else's desk, of which then we can refer back to Mr. Morton and his team, who can then assist with the analytics, I can never say that word, and try and look to some suitable sort of solutions to help the customer.
Okay, so changing direction now. E-bikes and e-scooters. We're seeing lots of questions from our clients, local authority clients in particular, who are looking at fleets, if I can use that word, of electric bikes for staff to use, or banks of e-bikes for the public to use, and also e-scooters. We'll come on to Toby's question about electric vehicles in a moment, but if we can focus first on e-bikes and e-scooters, because there is a particular and specific insurance position in relation to those types of vehicles. Gary, do you want to explain that?
Yep. Currently, there's about 5 trials nationwide on these e-scooters, and they are rental e-scooters, and at this moment in time they are the only legal vehicle, inverted commas, on the roads. Now, they are currently insured by a large motor specific insurer. However, this is just purely for the trials. That's my mistake. Hang on, and that is. Give me 1 second while I get rid of this, because I forgot to do that. So sorry. So they're basically, once the trials are finished, the motor world are basically saying they're not going to provide RTA cover for these, and any specific cover would have to fall down to public liability. Now, we've got 2 problems there. You've got the business use, or corporate side of things, or your personal side. So there is a massive conundrum at the moment on who is going to provide cover for personal, whether it's going to be a household insurer, who not everyone has, and from a commercial perspective, is the customer going to PL insurers, are they prepared to do that? Because as it stands, they are still illegal to use on pavements and public highways without relevant insurance, and other than cycle paths, that's the only place that they can be used. So when you see people darting around your town centres and up and down roads or whatever, they are actually riding them illegally and are subject to normal road traffic convictions.
It's a changing world, though, isn't it? I think that's the thing. I'm an e-bike rider myself. E-scooters are fantastic fun. They will solve a problem, but they will introduce more risk and more hazard. There's been about 30 deaths on e-scooters since 2018 that we know of. Some really high profile ones in London, under inflated tyres, and that was a rental one as well. Local authorities, local organisations can get support from the government to trial these lovely e-scooters. I say lovely, other people say they're a death trap, and they're as dangerous as anything else out there if used incorrectly or inappropriately. But the government are at least making some approach and not ignoring it. I think that's probably the safe ground that we're in at the moment. It's not being ignored. Everybody's acutely aware of what the downside is and the lack of insurance. And at 12.5 miles an hour, which is the legal limit for e-scooters at the moment, you can cause a significant injury to some people. On e-bikes, they've been around a few years longer, aligned with EU legislation 4 or 5 years ago, limited to 15.5 miles an hour and 250 watts nominal power. Again, in the right hands, and as we've seen over the last 6 or 7 months, just the market has blown up. Everybody's gone crazy for e-bikes, and it's probably the only way people are choosing to buy bikes, if I'm perfectly honest, according to the retailers. So that's another one that's not going away. And I think we'll see some moves around domestic insurance, probably bringing in a little bit either an exclusion or an inclusion clause around, have you got an e-bike or an e-scooter, because you will have some public liability in there for what are legally allowed to be ridden around on. And I think that's the future for us with these little personal mobility devices. If you've never been on one, have fun, enjoy yourself. Do it in Monaco or somewhere first. It's far more appealing.
With a helmet.
Always wear a helmet.
Always wear a helmet.
Never been more truism out there. Wear a helmet. It'll probably save your life, because you will crash, and that's probably what the big sticker on each of these devices ought to say.
And
you'll go faster than you think you should.
And you see many people, you will see them now that they are scooting along a road or a pavement. You see them wearing their business suits and also doing what you're not allowed to do in a car, texting on your mobile phone. And the amount of people I've seen doing that as well. So there's all sorts of pitfalls, shall we say, from a corporate perspective as opposed to a personal perspective.
It's quite Darwinian, isn't it?
Yeah.
So moving from little electric vehicles to bigger electric vehicles, and Toby's question.
Cost of insurance,
Yeah,
Alison.
cost of insurance for electric cars. Okay.
Yeah, the favorite question pops up every day at some point in my inbox, asking for a bit of help. Gary will tell you about the market, and I'll be the proponent that says, shift to electric vehicles.
Just before you carry on, just in case the audience can't see Toby's question, I'll just read it out so that the audience knows what you're answering. So we're looking to convert to electric vehicles once our current vehicle lease deals expires. Thus far, the insurance cover for EVs has been higher, which I assume is connected with the anticipated higher repair costs owing to the newer tech and batteries, etc. Are these prices going to soften? So back to you, Phil. Apologies.
I was only interjecting before Gary gets on about the market rates and the pricing. We're all heading down the EV route. I don't think it'll be very long. The government are knocking 5 years off at a time where it'll be legal to sell new petrol and diesel vehicles. We'll all be driving around in EVs. Yes, they're more expensive to repair because the battery tech is hugely expensive, up to 50-60% the cost of a vehicle in some cases. So damage that, and you're immediately writing the vehicle off, which is where Gary will tell us why insurers are reacting like they are. When will it change? It will change when the market realizes they can still be profitable by insuring EVs. We have no issues that I see with a small number of EVs in a typical fleet. But what we do have now is this big push towards EVs. There's government grants, there's less tax to pay. They're an incredibly efficient and low maintenance way of moving people around. And for me, they're better connected. There's more data. They've usually got cameras. They've usually got decent telemetry without having to bolt on extra boxes. And that's opening up an entire new insurance market for us. Gary, I'm going to flip to you really, because I think there's two bits in there. One is the current situation, and then one might be UBI, PAYG type insurance for connected fleets.
Yeah, well, at the moment, the exposure really of commercial fleet is very, very different for personal lines, because there are specific insurers who look to just do EVs, particularly Teslas and that and the like. But where your normal commercial fleet, it is mainly written on third-party liability type instance. But we have seen over the last 2 or 3, 4, 5 years an increase in the cost of damage to vehicles, and that's not just EVs, but vehicles in general with the kit that's involved in them. Everything from rear parking sensors to indeed just your wing mirror, which is actually connected to everything else that goes on in the vehicle. So gone are the days when you could nip down to the local scrapyard and get a 20 quid wing mirror. It's now about £1,000 or whatever, if you've got all these wonderful things in, even your mid-range vehicles. Now, EVs obviously have just started coming to the forefront, and there is not really sufficient data by insurance to see exactly how it is affecting, other than they are seeing an increase in damage claims simply because of that. Now, as Phil alluded to, the battery pack on these things are the most expensive. So if you get rear end shunt at maybe 15, 20 mile an hour, you would have just taken some panels off, put a few more on, and there you go, it's sorted. Nowadays, that will probably write the vehicle off, because if the battery loses its integrity, it's got to be replaced. And if you've got to replace half the vehicle cost, insurers will write it off and get salvage from what they can. How many have we seen on vehicles? I would probably say what's come across my desk, probably not even 5% of the vehicles that are out there at the moment on fleet policies are EVs. They are increasing, and as Phil says, I will get the same question 2 or 3 times a week at least. And the impact is, how much will it impact my costs? That, I'm afraid, is the unknown bit, because it's exactly the same as fitting tech to your vehicles. We don't know until a year, 18 months, 2, 3 years down the road. But there is also the other problem of EVs on the third party side. From an insurance perspective, they're very quiet. So you can probably imagine when you're walking along and you think, where's that come from? And yet people nowadays walking out in the road as they're staring at the extension to the hand and not looking at traffic. You may get increased pedestrian or increased cyclists, or dare I say, increased collisions with e-scooters.
Tempered a little bit though, isn't it? With most EVs being so connected and bringing in a lot of the modern automated driver safety ADAS related tech, we know there's a lot of collisions being prevented because of the high-end EVs that are out there. But the market is the market, and as we strive to drive cost out of owning electric vehicles, manufacturers will strip out expensive technology, and the really good technology is what balances the books a little bit. It's a little bit like grey fleet. When organizations choose to take company vehicles away and let employees use their own vehicles, it immediately removes a lot of capital expenditure and ongoing costs, but it introduces a massive hidden cost around whether they've even got the right insurance. Is the vehicle even capable of performing to the standard that the organization might want that individual to be able to perform to? And that often has the iceberg principle, hidden costs. EVs, massive cut in fuel costs, massive cut in ongoing maintenance costs, increase in insurance costs. There's no free lunch with EVs at the moment. And I was working with an organization, an AON client, a couple of weeks ago doing a training seminar, and their entire research and development department is working on hydrogen containment systems for passenger vehicles. So, looking over the horizon, this is a massive multinational French company. Billions and billions has been ploughed into hydrogen vehicles, hydrogen fuel cells. They will need battery technology to allow vehicles to accelerate harder and run all the equipment in it. But a hydrogen fuel cell can be refilled in a matter of minutes, and it'll give you another 300 or 400 miles range. And it's just pushing water out of its exhaust system, but it's creating huge amounts of electricity to power the vehicles. So we're not looking at electric vehicles like that's going to be it for 20, 30 years. I think we've got a 5-year period where electric vehicles are going to hang around and be keen, and then we'll see hydrogen fuel cells really coming into the mainframe. And we can't ignore the likes of Tesla, who have created the equivalent of an electric JCB. Their truck, their ability to disrupt the market is massive. But they're right at the cutting edge and high-end pricing. Now we see the major manufacturers coming on board with the types of vehicle we have to use and drive around in normal life. And there will be a consequential increase in insurance. But we can work with that, can't we, Gary? That fleet offers a new opportunity to get towards use-based insurance, pay-as-you-go insurance, no insurance, no excess insurance. If it's, vehicles are parked up, it only needs insurance for third-party fire and theft. If it's parked upon your premises, that's a lot cheaper than fully comp. And as a lot of organisations have found over the last 6 or 7 months, you can park all your vehicles up and send all your people home, but you're still paying insurance on them. And use-based insurance will dramatically change that, especially if you can choose when and where people drive to limit the expense of driving into town and city centres in peak hours where children and lots of other commuters are. You might be able to reduce the pennies per mile. Might be the deal as opposed to pounds per mile. But we don't have enough clients out there and enough appetite in the market for the small number of organisations that have got a fleet to really make an impact on any steady pricing.
We've made inquiries on use-based insurance and mileage, etc. But the comment that came from one of the sort of big ones was along the lines of, how do we, they've still got their built-in exposure and still the potential for large catastrophic losses. So there will always be a minimum premium of maybe, say, I don't know, 40 to 50% of what they would think of the average cost. And there will only be that portion of that insurance that would be on that use base. It'll work both ways. Obviously, if somebody decides instead of doing their normal 2,000 a month, they suddenly do their 5,000 a month, it will go the other way. So it's not an easy answer, and it won't be an answer for everyone, who do significant amounts of mileage. I think we've got a couple of police forces that were invited or maybe on this as well. So it may work for just your vehicles that are just doing general around town patrols, etc. But if you're running the interceptor fleets or something like that, it'd be very, very different. And again, obviously the types of vehicles that you'd be using. So from a police force to perhaps to a limited refuse collection round, it would be very, very different. And it'll have to be bespoke towards that particular client. And then
the days are not far away from silent bin wagons. I think we can all imagine that being quite a pleasant experience, through to high-speed pursuit vehicles. They'll top out at about 120 mile an hour. That's not going to work, but they'll get to 120 mile an hour really, really quick. So there'll be different tactics employed. We've all got to adapt to these vehicles.
As you've mentioned in the past, Mr. Morton, the tech that is now in vehicles, they probably, from a police perspective, won't be any need for an interceptor or a police chase, because you'll have access to the switch that'll just turn the vehicle off.
We know from working closely with one of the global telecommunication businesses. I think that's about as much as I'd say about Vodafone right now.
Exactly.
But working with Vodafone, they've got a massive imprint in this, because they're really about handling data, and we're working closely with them and listening to what they're doing and where they're going, and we're trying to do, it's a strategic partnership where we're not selling anything, we're not gaining anything other than knowledge, but already they know they can find a vehicle, stop the vehicle, and potentially drive the vehicle whilst someone's in it. This is Big Brother at the highest level. They can do that, and there's the majority of motor vehicles coming off the production line, passenger motor vehicles, that technology is built in, but the laws don't allow it in the country. But maybe we should lobby government a little bit harder so that some organisations do have access to that, because we'd eliminate quite a lot of the high-speed car chasers instantly. All you need to do is be able to log onto that vehicle, and you can bring it to a stop and lock the occupants in it. That would make for good TV, definitely.
And it would ultimately reduce insurance costs, because there's no danger of the vehicle careering into the proverbial bus queue, etc., and causing untold damage to the the people.
Alison, we didn't go silent. We were
didn't.
talking while you were gone.
That's fine. There was somebody
Sorry.
knocking at my door. Apologies. One of the stresses of working from home. So apologies for that. So we've not. So that leads us on nicely. Working from home and changes to behaviour. What are you seeing in relation to driver behaviour and COVID? Either in a fleet environment or non-fleet environment.
I'll pick that up a little bit if you want.
Are you going to, before I go?
Go on,
yeah,
Gary.
I'll go.
No, the behaviours, in all fairness, we all, everything when it was all locked down, I think we got to a point there where there was probably only approximately 10% of the available vehicles on the road at the time, and most of those were essential use, such as obviously delivery goods, Tesco's, etc., and all of that lot. And all the big wagons and all the commercials were all driving along on very empty roads. So that did actually cause its own issues, because obviously people got complacent and driving around, and I think it was mentioned frequently that anyone driving down the M1 or whatever, I think we were trying to break the 200 mile an hour record or something or whatever. So that did have its challenges, but the actual frequency did go down, cost did go down, but once sort of lockdown came out, it started to creep, and people hadn't been driving for 3 or 4 months, and they just basically forgot how to drive. So frequency started going up, cost started going up, careless, inverted commas, driving went up. And I think we're now sitting at about 90% or over of pre-COVID, and you can tell, the frequency is back to normal, claims costs are back to normal virtually. So that little window that there was of respite has returned to where it was pre-March.
Did you have many clients asking for rebates when their vehicles were laid down?
We did. We did give a clear instruction out to the business back in March that we campaigned with all the insurers, we got their views on it, and the clear instruction that did go out that if they were prepared to look at reduced usage, but there was a requirement for vehicles to be sawned, taken off the road, stored in a fire break way, and they would then consider giving a refund over the actual annual premium. Some people have asked whether, because there's been reduced usage, would insurers consider, and they've flatly refused, simply because whether you're driving 10 mile a week or 100 mile a week or 1,000 mile a week, there is still that potential for a large loss, and that's what they're priced at. And they price their year insurance basically on the past 4 or 5 years history and the anticipated next year. Reinsurance costs haven't gone down, large loss provisions haven't gone down, and ironically, admin costs haven't gone that much down for servicing, because people are still dealing with claims, they've still got the businesses, etc. So it probably reflects very much similar to your own workplace. You can't just suddenly stop paying for something that you're not necessarily using as much.
So I'll come to you in a second, Phil, but final question for you, Gary, in relation to COVID. And are you seeing changes in wordings on the motor side? No. So because
effectively COVID it's irrelevant when it comes to actually pricing the insurance. It's basically use-based and disease or whatever. COVID, you could either turn around, sorry, somebody's got flu virus, or whatever. You can't really have a collective. It could change tomorrow. So yeah. No.
Lovely. Okay. So from a risk perspective, Phil, anything you'd like to add?
Hopefully you can hear me all right. I was losing a bit of audio there. From a risk perspective, we can plot on a chart where lockdown kicked in and where it unlocked. We've got a few clients coming through a renewal cycle where their loss ratio looks fantastic for 2020. Unfortunately, the 6-7 months with virtually no vehicles on the road, probably 3 or 4 months if we're honest, where the number of vehicles on the road was dramatically reduced. We've seen it with large goods vehicle fleets and delivery fleets where there just aren't the usual domestic family vehicles on the road, and therefore they've had fewer incidents. They've literally been able to drive around as and when they want and not have to cope with what they would consider to be the main cause of their incidents and accidents.
I just mentioned something, Phil, there, and it's that horrendous incident last week. That was a car with multiple occupants and a delivery vehicle. Obviously, the whole circumstances have not yet been released, but that is a prime example of what does happen, unfortunately.
That was an incident involving several fatalities, wasn't it, Gary?
It was,
hit the
yes.
national press. Yeah.
We know from the companies who work within the recovery sector, their roadside rescue and recovery units have had so very few rear impacts when they've parked up and they're dealing with a client and a motor vehicle, because the volume of vehicles just hasn't been on the road, and the drivers that have been on the road tend to be the ones that have got a little bit more roadcraft. They know to pull out from the inside lane of a motorway if something's on the hard shoulder, opposed to just ploughing on past at 60, 70 miles an hour. And it's made a dramatic impact in many lines of insurance that we've been looking at. I think that phase 2 of the pandemic, regional lockdowns kicking in, we'll see these little blips carry on, and this will be quite a long tail attached to it, because these will come and go over the next 6 to 12 months, depending on how long this particular bug is rife within the population. But what we do know is we'll see far less of us getting in the motor vehicle and doing 20, 30,000 miles a year, because our employers have found that we are actually adept at working from home. It's a lot cheaper to keep us at home than have a flashy, glassy office in a city centre. And AON's not immune to that. Yesterday, with lockdown in Wales, we know that the Cardiff office is closing down because of that lockdown in that part of the world. But we also know we won't reopen offices which are shutting down because of the number of people in there and the fact they've been perfectly adept at being able to work from home. We'll have smarter offices, won't we? There'll be no desks sat there for you. You will do less mileage. You will probably be expected to work remotely and be a bit more virtual. That will cut down the number of us on the road, and that will have an impact on the number of incidents and the costs that flow from it.
So we've touched on smarter offices. What about smarter motorways?
Yeah, do I want
Sorry,
to?
Phil. Sorry, Phil. I thought
that's the that's the curveball.
It is a curveball. Thank you, Alison. Yeah,
Sorry.
smart motorways. They're brilliant, aren't we? They allow more traffic to flow much faster, and they're full of cameras. That mean if you are not watching what you're doing and you're not paying attention, which is most of us most of the time in modern motor vehicles, you are going to pay for the pleasure of smart motorways, easing the burden. Let's not skirt around some of the subjects here. We've lost the hard shoulder on many motorways. There's been some horrendous accidents because of hard shoulders where vehicles have pulled over. And there are horrendous accidents where vehicles haven't got a hard shoulder to pull over onto. And there are hotspots that the various agencies and the government are trying to put something different in place to try and remedy that, because it's a continually moving feast. But there's no ignoring the fact there's getting on for 40 million vehicles on the road. There's a few 100 billion miles being driven. All of us see driving, most of us will see driving as being something we want to do, because it's part of an entitlement we think we have. And it's expensive, and we've got to adapt the infrastructure to cope with that, given what we have in a country as free as ours, where I think we used to be able to go where we want when we wanted. But when that does come back, smart motorways are a really good way. But we're in the UK. We should be building new motorways with better design than adapting old motorways. I guess we've got a big argument there around the rail network. That's very live in terms of politics and emotion at the moment. But we're not cut out in this country to just plough another motorway through the middle of the countryside. It would take forever, and it wouldn't be big enough then. There's an analogy in the civil engineering world, which means if you build a new road, people, it leaves traffic somewhere else, but that will fill up as well, because more people will come to use that road. So it's the smarter approach to use technology to slow the vehicles down, there's far less of the concertina effect on the highway network now. Most of us will have been driving long enough to remember that you could grind to a halt and there'd be no accident just because one car had a harsh decision to brake really hard, and that concertina effect flows back down that road network, and everybody gets caught up in it. Pollution levels go up. It's multifaceted, smart motorways. Yeah, what next? They're gonna charge per mile, aren't they? The technology's there. It is what it is. Welcome to the brave new world we're in. That I think they could be smarter, but you know, I'm not a politician, and I'm not running the budgets or the departments that are responsible for this. But they're out there, they're consulting, they're speaking. They're not blind or ignorant to what's going off, but it's an impossible task to get it right, and it'll never be 100% right.
So we touched earlier on briefly on grey fleets, and they are a complete minefield. Insurance-wise, it's not an issue for Gary, because generally it doesn't sit within the insurance programme. It is dependent on employees having appropriate cover. But from a risk perspective, Phil, what are some of the key tips that you would give to probably HR managers in addressing grey fleet risks?
So let me be just a little bit controversial here, and I don't expect any HR manager to squirm too much, because there's people out there who you can potentially get this answer from, or work with people to get this answer from. But with any grey fleet exposure, you've got an employee who's at work in a piece of work equipment that you've asked them to provide. So the lawyer in me, the ex-health and safety inspector, would say, have you risk assessed that piece of work equipment? Because the answer is probably no. And if you have risk assessed it, how have you risk assessed it, and how are you maintaining that risk assessment, and what did you set as control standards to limit the injury or harm that piece of work equipment could cause to the occupant or members of the public? Flip side, because that's very health and safety at work actish, is how much do you spend on grey fleet drivers every year to manage that driver and their vehicle? When you're leasing a vehicle for them, or providing a leased vehicle for them, it would be a few £100s a month on the vehicle, and maybe a couple of quid here and there over the year to run a training course or some kind of e-learning. And I work with clients with that. What's the end game look like with grey fleet? You're going to be stood in front of a judge, and if I were the judge, and I know a few, and I've primed them with a question set, which is just ask the organisation how much they spend on training their drivers to drive at work. How much you spend on a monthly basis on this driver that you're in court to try and help the court understand what and if a penalty is due for whatever has occurred. And most organisations just can't put a number on that. Grey fleet, it's wonderful. It cuts a massive cost out of operational budgets. It introduces a huge risk, and we're well set up to help. We've got all sorts of capability there, but it does boil down to that rude question in a courtroom one day, which is, well, is it a £5 a month? Is it 30 quid a month? Is it £100 a month to keep that driver and everybody that may be affected by them in a safe manner? Or is it next to nothing and you just pay a mileage rate? And within there is a very uncomfortable hour or two under cross-examination about why the organisation hasn't spent a lot of money looking after an individual that they're accountable and responsible for undertaking one of the most dangerous things we do, which is driving at work.
And one of the key drivers from moving from a leased fleet or provided vehicles to a grey fleet is cost, and cost is not a defence, is it? That would be taken very harshly in a courtroom.
It would be relatively easy to turn it around. Why did you move away from providing a £300, £400, £500 a month vehicle?
Yeah. Well,
it was a cost saving. We're saving money in the organisation, and it'll rapidly turn into a discussion and an awkward set of rhetorical questions being asked, which you just have to grimace at, which is, so you're putting profit before safety. That classic question in a courtroom is always a beautiful one, because you're going to say, no, we weren't. we've got these things that we do. We run this training course. We put people in a one-to-one situation. We've got a fabulous psychometric software package that allows us to evaluate a driver before we employ them. You know, these are not made-up solution lines, but we're not here just to tell everybody we're brilliant, come and see us. We're here to try and help you see what is out there. You know, go back to your insurance broker or your insurance company and say, we've got a grey fleet risk. I really need to understand what we can do better. You don't want to find yourself trying to advise the company lawyers that you really weren't doing anything to keep those drivers as safe in what might be a 5 or 10-year-old vehicle, which probably doesn't have any automated advanced driver braking systems, no city safe, for argument's sake, as a brand name, no ability to stop low speed impacts. It might have an orange light on the dashboard, but it's halfway between its MOT and who's going to go get that fixed at 500 quid until the MOT or until they sell the vehicle. And onboard diagnostics in vehicles do get checked really rapidly and really easily, and it will show what went on in that vehicle and how well maintained or how poorly maintained or how well driven it was. You then need to support that with what you're doing with your driver. Are they doing 20, 30,000 miles a year? What have they done since they passed the test? Have you taught them to drive the vehicles you've even given them to move it slightly away from grey fleet? We don't do it. We don't do it very well in this country at all. We've made a lot of savings running grey fleet risk, and we need to consider balancing the books as to how much you want to invest to try and minimise the exposure of the organisation by having grey fleet risk.
Okay, so final question from me before we open it up to questions from the audience. And I'm going to ask you to get your crystal balls out. What else can you see on the horizon? What else have you got on the agenda for the future in relation to fleet and motor risks?
From my perspective, it's basically looking and working with insurers to produce, you know, more fit for purpose policies, which, you know, touching back to the mileage based, and also because it's still being underwritten on a more traditional basis, and there are other ways of looking. You know, we have the telemetry, we have the kit, we have the connectivity within those to start looking at different ways. For example, you've all heard of Uber Eats and all of that sort of stuff. Most of these people are running around in their own vehicles and they've got an app on their phone which suddenly says, right, I'm working for South Yorkshire Council. That's weird, but in the evening, guess what? I'm working for Uber Eats. So he flips the app and he goes onto that insurance. So therefore, his fit for purpose personal lines insurance, which grey fleet, going back to that, has business use for South Yorkshire Council. That suddenly stops working and it goes on to Uber Eats. So there may be all sorts of things going on, and it's more specific to that part of the business or that individual. But as it stands at this very moment in time, we're still looking at the more traditional rated type insurance policies. But from that tech perspective and what's out there, Mr. Morton looks at a lot more of that. So I will throw it back to him, but at least it's not a curveball.
Yeah, what's on the horizon?
Yeah.
I don't want to throw the PowerPoint slide up and kill everybody with that. What's on the horizon? Connectivity, connected vehicles,
That's the one.
data flow. I think I started the hour with that. We know technology is developing quickly. We know people are expecting more from their vehicles. Organizations expect more from their vehicles. Gary's alluded to that. Car manufacturers are prioritizing automated vehicles. They're prioritizing connected and electric vehicles. But they all present interesting challenges, huge benefits, huge opportunity. There's going to be city centres you cannot use with a regular motor vehicle very shortly. That's been delayed a little bit, but it will happen sooner rather than later. Your business will need to have these vehicles. We talked about pay-as-you-go insurance, use-based insurance. That's technically what Gary described there. You pay maybe 50% premium. Your IPT, your insurance premium tax, is immediately cut in half because there's 12 pence in every pound of insurance you buy goes to the government. So you're already 12 pence per pound out of pocket because you don't get that back. So that gets cut in half with a use-based insurance program. And these are not available overnight. you know, we've got a project underway, and it's very selective about who can come on board and why, because the market just is not ready for it. I think will be affected. Remember, we're brokers, not the insurers. But AON are beating them up, and they will fall in line. But we need to go to them with 100 clients with an automated fleet full of data. You know, one at a time. Nobody's interested. You'll get a rate, and it's a brutal conversation. But buy those vehicles, lease those vehicles, optimize your business model with those vehicles. Insurance will follow, but you will be able to take a non-conventional insurance program to help you offset cost. And the smarter the vehicles are, the more they're going to automatically brake, the more they're going to keep the distance from the cars in front. I will share the slide because I know we've only a few minutes, because I think that gets us neatly into the discussion around what the tech is doing and why it's coming. You just let me know you can see the slides.
We can.
A launch. It should launch. Is it going to launch? It launched. So I've just discussed some of these things that are changing. There's 40 million licensed vehicles, 330 billion miles are driven. It's all around IPT and CCTV. Can you mitigate losses? That's what's coming. That's what's changing. But we know when we look at the claims, these are you know, very general statistics. It's more than a third of traffic collisions involve a person driving for work. But it's data that's very difficult to empirically prove because it's not captured 100% of the time on every single bump on the road. We know it's higher than that. We know there's 2,000 to 3,000 fatalities a year on the roads where the person who died was probably at work. That's 20 times higher than it is in building sites and factories and on oil rigs and out at sea. There's 110 to 140 of those workplace fatalities, but 2,000 to 3,000 go unreported because of driving at work. The majority of accidents are entirely avoidable. That's the truism in here. Top three, no particular order. Hitting a parked vehicle or property, it's distraction. You're not concentrating on the road. Hitting third party in the rear. Why were you not watching the rear of those vehicles and keeping a safe enough gap to allow your vehicle to come to a complete stop in any weather condition that you can adapt to? Those are important elements. Again, training and retraining is usually all that drivers need to avoid hitting third parties in rear. Insured vehicle and reversing. It's a skill set and an art form, trying to get people to do what they had to do for the test maybe 10, 20, 30 years ago. But we know most reversing accidents are down to people just not bothering to try hard enough, not stopping the vehicle and getting out and having a look. Modern vehicles take this over. We're probably going to make it a little bit too easy. We're probably going to get to a situation where we need to look backwards a little bit to start looking forwards.
So Amy has just asked whether we can have the slides, whether we can distribute the slides, and that's a yes.
I put slides up and they're instantly requested. Yes, that's why I put
See,
them
now
together.
you wish you'd put them up earlier, don't you? But of course, Amy, yes, and we'll ask Sarah and her team to do that after the event. Any other questions?
Just seen one from Toby Ellis in respect of age restrictions on policies and particularly on drivers over the age of 70. Now, there's no restriction generally. Some of the more traditional Lloydsy type and MGAs or who may put certain restrictions on, but they're not generally set in stone unless you're essentially a professional driver or have convictions, medical conditions, etc. So it may just be part of the insurance policy that's been agreed at the time, and agreed, yes, the population is aging, and boy do I feel it. And it is a question to your broker, to us, or whoever, and that can always be negotiated out. The expectation would be a majority of your active drivers generally sit in the 27 to 55 age group, but that's nothing to say that you can't have a 75-year-old, providing that he ticks all the relevant medical boxes, etc. Similar situation on 17, 18, 19-year-olds. It's just a risk, and the older driver tends to be a lot more safer than the younger driver, but they have their different sort of issues, you know, from an age perspective.
One quick one before
Yep.
you cut us off. That very last slide I flashed up, I didn't drop down all 3 bullet points, and it's useful for anybody out there. It's probably worthy of an email out to the organisation if you can get it set up. Clocks change on Saturday, Sunday.
Yep.
Statistical evidence shows a massive spike over the next couple of weeks because the evenings are darker all of a sudden. Between 4 o'clock and 7 o'clock, average cost of a claim £2,100 at the moment because of those changing clocks. It's just one of those to go out there and remind people they're bleeding obvious. You're going to be driving home in the dark. You need to adapt to it. Leave bigger gaps. Slow down a little bit. Just stop.
And obviously the weather is getting worse. A lot more rain, a lot more fog, a lot more wind. So yeah, just being a bit more aware.
So on that cheery note, I think unless there are any other questions, Sarah.
That is fine. Thank you so much. We really appreciate it. I think it's been really, really useful, and I think you've given the attendees something to actually think about and go away thinking.
Mm-hmm.
If any of the attendees get any questions that they need after the event, just let us know. I will be following up with an email with today's slides and today's recorded webinar. So that will get done in the next couple of days. But once again, I'd like to say a big thank you to Alison, Gary and Phil for their time this morning. We really do appreciate it. And for everybody else that's joined, we hope that you have a lovely day. Thank you for joining. Take care. Goodbye.
Thanks, Sarah.
See you, everyone. Bye.